Can oil prices actually rise above $90 a barrel? Can global economies actually function above $90 a barrel? Why is $90 a barrel the magic number that has everyone concerned massive demand destruction is going to take place if oil is over $90 a barrel? Well, let's look at history. Back in the big oil price spike in 2008, when crude oil prices went to $145 a barrel, T. Boone Pickens was screaming $300 a barrel. Everyone had no problem worrying about trying to navigate the economy with raging inflation looming on the heels of what was going to turn out to be one of the greatest financial crises since the Great Depression. And the fact of the matter is, over the period of 2012 to 2014, for a 36-month period, oil ranged from $99 a barrel average in 2014 to a high of over $112 a barrel in 2012. For 36 months, we had oil prices north of $99 a barrel. No one screamed about demand destruction. No one said, look, we had a financial collapse in '08, one of the largest financial debacles across the globe that we've had since the Great Depression, and no one said a word about it. Demand destruction didn't occur. It just changed. This consumer stopped consuming oil. This consumer picked up using oil. And so what really is the issue is it's a mental game. Everyone wants us to believe as consumers, they want the entire world to believe if we don't have oil below $99 a barrel like it was in 2014, the whole world is going to stop using oil. It's going to crash. We're going to end up in a recession, and it just can't be managed. It's not the truth. It's not the truth. The truth is you'll start refining the consumption of your oil. You'll make choices on the consumption of your oil. Maybe you don't buy a 40-foot yacht, you buy a 30-foot boat. Maybe you don't have a truck that burns 12 miles per gallon. Maybe you go trade it in for a car that does 35 miles per gallon. Maybe you don't air condition your 3,000 square foot home in South Texas when it's 100-degree heat. Maybe you decide that you'll have it at 75 in the house instead of 68 like a meat locker. The truth of the matter is when you start looking at the price of oil above $90 a barrel, history has shown it more than adequately absorbed any kind of a price that rises dramatically over a short period of time. I can tell you, I lived through it. In 2008, I watched oil prices go from late 2007, around $37 a barrel, to a record high over $145 a barrel. That didn't last long. It lasted maybe 90 days. But when that price of oil fell, it fell right back to about $35 a barrel for a very short period of time. That pendulum swings very hard high and very hard to the low side. But it swings, and it can be very dramatic from both ends of the scale. But when the market settled down after the '08 crash occurred, about 9 months into the financial collapse, guess what? The actual cost of a barrel of oil that the market had to pay to get the quantity they needed based on the supply that was available was north of $99 a barrel. In fact, 2012, it averaged $112 a barrel. I didn't see restaurants close. I didn't see people hitchhiking to work. I just saw people become more aware that energy costs more. So they cut out other things they didn't need, other luxury items. Maybe they didn't eat out 5 times a week. They ate out once a week. My point is simply this. When I look at the historical numbers for oil and gas, and I look at 40-year career that I have in the oil and gas industry, I look at the fact that people, the consumers, estimate that crude oil and fossil fuel consumption is just like having water at your tap in the United States. Everybody expects to turn on their faucet, water their lawn, fill up their bathtubs, fill up their swimming pools, and they all expect it for $35 to $50 a month. Now, why is that? Surely the cost of getting water, fresh water, potable water to your house has had to go up dramatically in cost over the last 20, 30, 40, 50 years. But it hasn't. Everyone expects it to be cheap. The problem with oil and gas is it's not government run. The problem is it's a free market. So when I start looking at what the price of oil could do over $90 a barrel, could it be sustainable? Will it get there? The answer is absolutely. Over 4 decades, 40 years, I've watched oil move from about $11 average price per barrel in 1985, and all of a sudden it migrated its way up to $17 a barrel. Well, mathematically, that was a tremendous increase in the value of the oil in the ground and the cash flow we received from the wells producing at $17 a barrel versus $11. Then you migrated up to about $25 or $28 a barrel, and then you migrated up to $35 a barrel, and then you migrated up to $50, then $70, $80, $90, and then it pulled back down. But every time it came back down, it bounced even higher. Until today, we have producers in the United States saying, look, it takes $65 a barrel to break even. I don't know of a single entrepreneur in this country or a single business person in this country that works for free or goes to work every day to lose money. I'm telling you today, you can assure yourself oil is going to have to be much higher than $65 a barrel for U.S. producers to continue to drill wells, pay for the cost of wells and labor and diesel and fuel. So as a simple assessment, as you're watching the war take place in Iran, you're watching the dysfunction in the Middle East and the continuation of aggression across multiple countries' borders, what you're really witnessing is a new paradigm, a new shift that could suggest very easily the break-even for oil might be north of $85 or $90 a barrel for the next 10 years and longer. Why is that? Now we have things like insurance and logistics and diesel and cost and geopolitical risks that have to be factored in that barrel. And what's going to happen is that as this all plays out, $90 a barrel, can that be a real price? It's going to be like talking about historical events. I can see in the next 10 to 20 years, the normalized price for a barrel of oil around the globe is north of $85 to $90 a barrel. And then at that point in time, break-even is going to be about that price. Now we'll be talking in 2045 about can oil really drop below $80 a barrel? What's the real moral of the point I'm making? Today's chaos, today's geopolitical events simply highlights the world's infatuation with fossil fuels, the world's absolute necessity to burn a barrel of oil, a molecule of gas, and you can put in nuclear plants, you can put in electric cars and windmills and solar. But at the end of the day, at 101 million barrels a day consumption, I would highly suspect in the next 10 to 20 years, we're north of 110, if not 120 million barrels a day of consumption. So we need to add 10 to 20 million barrels a day. Today's supply shortage is just the beginning of the story. I don't know what the end is. It just means one thing: higher prices for crude oil.